Hey, good morning everybody. I just wanted to make a video of some more back testing. I've been making a few of those for the Greystone community that I coach for, and a lot of people are seeming to find it a bit helpful. So I'm going to make another one of yesterday's price action, which was February 19th, and I'm going to leave all of my key levels. They're all in place from the 18th, as that was the prior day. This price action, so you guys can see here, it's the 18th is all my prior levels are set. I'm going to move my support and resistance off of everything and just kind of walk you guys through how I would back test yesterday. Yesterday's price action was really choppy. There was not a lot of clean follow through. I'm sure a lot of people did capitalize and make some money on it, but for the way I trade, yesterday was not a really conducive day. I did finish the day slightly red. I took two small trades in the afternoon, sized very, very small portions of my portfolio, less than 2%, maybe 1.5% or something like that. I'm going to walk you guys through some of the stuff that I've seen in my trading windows. And now keep in mind, everyone, I only trade from I trade from 10 to 11 Eastern time, and I trade from 2 to 3 Eastern time. And I'll look at the chart sometimes at 1:30, 1:15 and possibly take a trade, but I really try to limit my screen time down to my chart time as far as trading goes, down to 2 to 2.5 hours a day. Sometimes I'll come on a little bit earlier, I'll stay a little bit later, but I really just try to limit that as much as I possibly can, just for peace of mind. And I find myself, the more I spend on the screen, the more time I spend on the charts looking for that, you can kind of either start over trading or possibly looking for setups that aren't really accurate or as accurate. So that's just what helps my mindset. So anyways, let's talk about this. So if we look at our 10 o'clock candle, we have this huge big breakup. It takes out the swing points here, but this is not a firm candle, so this isn't an entry. Never sets up for an entry. And also we had a news candle yesterday. Then we get this violent retracement candle. I had an upper level of support around here that I was looking at. I did not take this. However, this trade would have probably got you about half off and break even. The reason why I didn't take this trade was it came down. If you look closely at this wick, I'm just going to zoom in on this, so just kind of bear with me here. So if you look closely at this wick, it comes down below the swing point of the pre-market, the top of the swing point, and then it comes back up and rejects it and closes above it. So that was just a really, it would have followed through, but to me that takes the probability down, where I'm looking for setups that have a 70+% win rate. And when it comes down and it rejects a key level like that and then comes back and pops off of it and then closes right above the green wick that was already created here, to me that just takes it down to more like a 52-55% chance. And I like to take trades that are high quality setups that'll move my account forward and not gamble it and put that risk on the table. So then there was another, I never did see another setup. I did look, I thought here possibly could have been a good entry for calls where this closed firmly above that swing point. I did not take that as well. It was just like the choppy, the way price was moving in real time was just very, very unorthodox for SPY, I should say. And then this candle comes up here, it closes above it. You might have been able to get a position off, maybe, if you were really quick to the draw. But I wasn't leading the session, and I didn't take any of these trades as well. And my good friend Ryan that we trade with, he did not take these either. And then we had like this weird thing here. I had an upper level of support at this time where I was looking at it at this region at 685.24. It closes firmly below that, immediately retraces. I didn't take any of that. And then by this time, price had kind of proven to me that it was just not following through with the strategy I used. So on to the afternoon sessions. And this is, this trade here, the session starts at 2 o'clock. So if we look at the 2 o'clock candle, you had, if you could have been on the charts, say like around 120, 130, and you would use a very aggressive lower that, you were looking for the bottom of that. This is a liquidity sweep here, most likely. This candle here could have been a really good entry. This is the one at 135 candle that did present itself. You had a lower level here. However, that's a super aggressive level in this bearish structure. To take this, and then you get this nice firm candle up here and a nice distribution. However, I wouldn't have taken this with the PDL low wick in the way, and also having to work through the pre-market low and the previous day low touches. That to me, that was just not a high quality setup. And then one could have argued that you could have took it here. It looks like it kind of retraced and then followed through nicely here. So you would have probably got, depending on how the contracts were moving, a half off to possibly 3/4 of a trade. So this would have been a really nice setup here at the 145 candle. And then the 2 o'clock session started. I was looking at potential calls here, and it came up and it rejected the top of these two candles here that I had as an overarching level. I didn't use that whatsoever. I didn't take this trade. It kind of consolidated up here. And then I was looking at calls a bit, and then I ended up taking this here and collapsed the trade. I think I lost like maybe $120-ish on it. I just did not trust it. When I took that candle, it should have went up, and I put a nice wide stop in to allow for a retracement. It didn't happen. And then at that point, I was still like just looking from the back of the morning session and throughout the day. This candle here, it did take out the pre-market high, and I didn't take this. And the reason why is I had an upper level of support where this white line's at 683.52, and I didn't take this. And the reason why is it came down and it rejected the previous day low from the New York session yesterday, and then this candle retraces up. Very nice to see it though confirm and hold that low part of the swing point, and then it did flush down for a really good trade. And then I did take this red candle here, and I was late to the party on this, and I did take a full stop out on this. However, I was sized down to like 1% of my account, very, very small position I took. But when this happened here, I was assuming, and it's never correct to assume when you're trading, right? Like you always want to use your analyticals, but I was thinking with this big, massive sell-off here that we had potential with it close here, and it rejected the underlying red level that I had, and I was kind of thinking that this level, my thought process is it would have closed here firm, and we could have at least came back down and tested the bottom wick here again and got a risk-free trade. I did think the risk to reward here on this big sell-off and this big push was worthy, and I thought something was happening news-wise that was making the market pull down on that one big bar. And then that was the last trade I took, and I watched price action a little bit longer. But this was like a really good example of like knowing when to stay away. And it can kind of be a little tricky to see it until it's already happened, right? But when you have key levels of upper levels of support or lower levels of resistance, and it comes up and it touches the overarching levels or comes really close to it, and then it doesn't give you enough room, those can be some really good signals to not take a trade and just wait for some clarity, right? Like, don't get into the whole FOMO idea that you have to take every trade when it gives it to you. And when SPY, which is the only ticker symbol I day trade, when that sets up opportunities, the more space that's created, in my opinion, the better, because space now allows the next trades to follow through and come and grab more liquidity on when those reversal trades happen or when those break of structures happen and they fall below. You have a lot more opportunity at that point to capture the profits that you're after, because the more space there is, the more draw that your trade will have, and the bigger trades that you'll gather. So that's just kind of the way I wanted to walk through this session of yesterday, because yesterday's price action on the 19th for the way I trade and the way we teach trading at Greystone was a very choppy, a very challenging day for the particular way that I trade. So hope you guys find some value in this, and if you're interested in learning from me, you can click the link below on the YouTube channel. Thanks, guys.